Estée Lauder, the stock that keeps on giving you headaches all day long, as this stock has crashed to 40% in 2023. Will it turn it around in 2024? Will we see the rise again of the stock? It could be happening now from time of recording, but this is bang, 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 could be the opportunity of a lifetime to get into Estée Lauder. Let's look at this stock. We're going to do a stock analysis of this company from revenue to net profit to shares outstanding to long-term debt to return on invested capital and everything in between. And then right at the end of the video, so stay tuned for that, I will give you the possible intrinsic value of Estée Lauder that can give you the opportunity to become the greatest in the world. Well, let's get to it. Let's do a stock analysis on Estée Lauder, the stock that keeps on giving. Let's get to it. And remember to like and subscribe to the channel. Let's go. Estée Lauder. Revenue 15.9 billion, down from 17.7 billion last year. So the bit of question marks if this trend continues. That's not a good look at the company. And also the net profit is down from 1 billion from 2.3 billion the previous year, and not looking so great again this year. So question marks on Estée Lauder. What's happening here? Why is it going down? Why are people not buying their products anymore? Is it too expensive, or it's just a sign of the times are coming? Earnings per share is 3.6, which is pretty nice. PE ratio of 38, so this company apparently has got a lot of growth to happen, even though it's dropped down 40%. So people might be saying the stock needs to come down lower and lower. It's too expensive still. If we look at the 52-week range, we're looking at $138 to $283. So the stock is definitely, well, actually it's lower than that. So I'm expecting it to drop from here, but it could turn around. It could turn around anytime. Don't you worry. When it comes to stuff like this, it can turn around before you expect it to turn around. When investing into some of these stocks that are very cheap, some may stay cheap for 5 years, but often they might stay cheap for a couple of months or up to a year, and you've got to get in. If you don't get in, you'll miss all the gains coming up. And whether you get it 20% above where the low is, it doesn't matter. You will still get a sweet deal going forward. If the stock performs as expected. Not financial advice. Do your own research before you invest into Estée Lauder or any single stock. Invest at your own risk. The sweet dividend of 1.8%, so it's not that big, but it's not bad. With dividend revenue, dividend of $264 a year. You've got no short interest basically on this company at 1.5%, so people think this company's around to stay. Market cap of 49 billion, so it's not a bad middle round company. Assets are 234 billion total assets versus total liabilities of 23.4 billion. That was going extreme, and liabilities of 16.9 billion. So that's a good range, but it's not fantastic, but it's pretty good. But free cash flow is a bit of an itchy, scratchy head, minus 1.5 billion. Was there an acquisition somewhere there? This is something to do more research on. 3 billion in 2021, so it's dropped big time. So yeah, a bit of an interesting one how this is going to go. You have to do more research onto that one. Long-term debt 5.1 billion with a negative thing at the moment. That is not good. But they have brought it down a little bit over the last year, down 7%. So they have been paying a little bit of the long-term debt off. So that is a positive that you need to see from company. The shares outstanding, 357 million. It's been pretty flat, this company, pretty much. Not much, a tiny bit of dilution, but nothing out of this world. But they're definitely not giving you heaps of your shares back at all. Maybe they're due for something like that. Maybe they need to do some share buybacks, a decent amount to really get you a bit more value, but they're not really doing much there, so they're not a major concern for me. Return on invested capital of 9%. Yes, 9%. This is not bad, and obviously some room to improve. But Estée Lauder, what's really happening with this company? Why are they not getting the best of the best? Well, let's be honest, they are just not performing up to the standards of some of these other companies, and they're probably, and to be fairly honest, have been overvalued for a long time. This company, some companies are rich, some people, and some are not so rich. But if you look at the performance of our beauty compared to Estee Lauder, it's day and night. And Estee Lauder has probably had a lot of money already in the stock that people see as a safe stock, and they just decided to take their profits now, and you're just seeing that decline. But also, obviously, the drop in revenue, the drop in their profit has been also a reason why they've sold out. That's clearly the main reason. So, but people would have been taking profits along the way, up in the highs. So, what do we need to do? Well, let's have a look at possible intrinsic value of Estee Lauder and see if there is a time to buy this company, not financial advice. So we're going to look at the grams calculator. It looks at the share price, earnings per share, growth rate, the current bond yield. You can put whatever bond yield you like for this. This is just a basic one. And we'll give you an intrinsic value. And then right at the end, I'll give you my own intrinsic value on Estee Lauder where I see it at. When I look at this particular calculator, it does not give you the dividends. So I bring the price down because the dividends paid out. It's less intrinsic value for the company. So that's just what I do when I do these calculations. So the share price I'm going to say is 135. It could have skyrocketed up to 150 by now, or it's dropped to 110. Who knows? But this is just to give you an idea of where the stock is. The share price is. So we've got $135 per share at an earnings rate of 3.6 earnings per share, and a growth rate of 5%. This company is a measly $69. Wow, wasn't expecting that one. 135, 3.6 again, with the same metrics with a 10% growth rate, you're looking at 107, so we're still overvalued. Now, if we creep this up, let's get this thing juicy. We'll put up to $5 earning per share at the same growth rate, then you're starting to get to just fair value at 148 or just over. And then we go to 15% on the same metrics, you're looking at a $200 stock. So, are they going to do 15% a year and improve their earnings per share? I highly doubt it. I'm thinking more in the 5 to 7 range. So this stock, to me, and you've got to include the dividend in this, I'm probably going to lay it right at the lower range and say the stock is intrinsically valued at around $70. Now, that doesn't mean the stock doesn't go to 200, because this stock, I'm being quite honest with you, seems to be a stock that's always, generally, when it's on the highs and the highest, is always overvalued compared to other stocks. And I'll give you options of Meta is the opposite. Meta just seems to be undervalued all the time, and you have to understand that. Some stocks are always often overvalued, and some are undervalued all the time. It's just the way it is, because not enough people, for instance, like Meta, I'm talking about the big investors, some people absolutely hate the company, don't understand the social media side. I think flip the script in about 20, 30 years, Meta will be more and more, if they're still relevant, or social media is still relevant, and the metaverse and all that, this stock will become one of the premium stocks. But right now, with the older generation, some of them do use Facebook and social media, but a lot of them don't care about the stock. That's why that one's down. But in Estee Lauder, they know the brand well, especially a lot of the older ladies, and the men are always buying it for their wives, so they understand it very well and know it's a safe stock. So, but to me, I see it as a $70 stock. Will it ever get down there? Probably not. And where would I want to buy it? $40. Is that going to happen? Probably not. But there is still potential for growth. Don't get me wrong. The stock can clearly do 10% growth, but you still want to get it under $100 easily too. But I'm very much low on Estee Lauder. There is growth there, but it's not super growth for mine. I'd rather be in something else. But definitely, more than likely, will be a decent play for people. But anyway, thank you so much for joining me here at Barry Charles. Remember to like and subscribe to the channel, and I'll be back with another video for you shortly.